Welcome, fellow business brokers, to Let's Chat, where we talk to CPAs, lenders, attorneys, and other people in our industry so that we can improve as business brokers. My name is Jim Parker. I sell businesses in the range of $1 to $10 million in gross sales. I'm really excited today because we've got Steve Mariani with us. If you don't know Steve, he is the guru of SBA lending. How you doing, Steve?
I'm doing well this morning, Jim. How are you?
I'm doing fantastic. I'm really excited that we're going to chat today about how the SBA lenders, and maybe you in particular, pre-qualify buyers for businesses. So let me
Great.
just
Thanks for
ask.
having me today. I do think this is an important topic that every broker should know because they all do it on different levels. And I think there are some basics that I think every broker needs to be aware of, and especially if you're considering financing as they move forward. So thanks for doing this. I think it's an important topic.
I do too, Steve. And as you know, I mean, us as business brokers, a good business broker is going to be pre-qualifying the buyer in their end. And we do that at my office. We pre-qualify these buyers. There's certain things that we ask for. We ask for a personal financial net worth statement. Obviously, we have them sign a confidentiality agreement. We want a little bit of a bio of their background and their experience. And we ask for why they're looking to buy a business. And most of the time we do ask for a copy of an ID, whether it's a passport or a driver's license or something like that. So we're pre-qualifying on our end, and we go one step further down the process as well. And we'll talk about that later. But I wanted to turn it over to you, Steve. And when you have a buyer call you, what are you doing, and what are other lenders doing on your side to pre-qualify the buyers for an SBA loan?
Well, that's a great question. And typically, we're responding to a broker inquiry. Keep in mind, we don't go to the general public, so it's very rare we're pre-qualifying a buyer that is not associated with either a broker and or a transaction. So ultimately, Jim, to be honest with you, we're going to pre-qualify that buyer for you as opposed to him. So keep that in mind. And the reason I point that out is we're going to have a little bit more stringent guidelines. If we're coming back to Jim Parker and we're saying, hey, this guy can go to $1 million transaction or $1.5 million transaction, we have to be able to back that up because you're the only market we serve. So understand, we only serve the broker market. So our criteria is a little bit stricter than most, especially most broker offices. But what my number one thing when I'm generally looking at somebody is their money management skills. That's really what I'm looking at. And we can go down that path. But you know, there are three basic things we're going to start off with, which is much like most broker offices. You mentioned some type of bio, their personal financial statement. We're going to demand credit reports, things like that.
That's what I like.
If they're
That's what I like,
interested.
Steve, is that you guys are pulling that credit report. I feel like when I pre-qualify it on my end and pre-qualify a buyer, it's more of, okay, this is a buyer that we are going to disclose the name of the business to, send a SIM over because we know they're motivated. It looks like they have the funds to buy the business. They've got, experience that we think will be related to the business. But, at the end of the day, then we send the SIM over to them and they can review that packet of information on the business. And, a lot of times at that point, we'll have a buyer seller phone call. But before we actually pull that trigger with a buyer seller face-to-face meeting, or definitely before we have the seller accept the contract, if they're doing an SBA loan, we want to make sure that it's qualified. And that's what I love about when I send them over to you guys, because you guys are digging deeper, a little bit deeper than we are. And I just don't want to waste everybody's time, my time, the seller's time, and even the buyer's time.
And that goes right to the single point. The one place we see the majority of broker offices kind of drop the ball, not drop the ball, but stop their process a little shorter than we do is I don't typically see broker offices demand bank statements to prove cash injection. 9 times out of 10, they are having them fill out a personal finance statement, like you alluded to, a bio and things like that. But you know, and a lot of our clients might have the cash in 2 or 3 bank accounts and not just one. But that's where we typically see the broker, I want to say, almost invasion because borrowers don't really like presenting that stuff to a broker. Yet on the broker side, and I defend brokers every single day to clients where I say they do have a responsibility to validate your purchasing power to the seller. I mean, they can't bring an unqualified buyer to the seller. So you have to understand the broker's position too. But how far do you go? And that's really the big question when it comes to the broker. Okay, the borrower says he has X amount of dollars. How far do you go to prove or disprove that? And that's really the disconnect. Um, we've all
Steve,
seen where
before you
they
go
say
on,
the money's coming from family members.
Steve,
Yeah,
I'm sorry to interrupt you. I apologize, but I wanted to hammer that point. I'm really glad that you talked to a
good.
buyer about that, that it's the broker's responsibility, because it is our responsibility. We don't want to be giving up the, obviously we're keeping the sale of the business confidential, and we don't want, we want as little as amount of people as possible to know that that business is for sale. And on top of that, if you've got a good quality business, and I'm very selective on the listings that I take on, that's a whole nother theory that we can go down on another video. But the other aspect of, if you've got a good quality business and you've got multiple buyers looking at that business, 10, 15, 20 buyers at one time, the last thing you want to do is be having all those buyer seller phone calls with a bunch of people that are not qualified, and you're wasting that seller's time.
You hit the nail right on the head. And that's the exact position we take when we're talking to a client. Listen, recognize and understand the broker's position. If you have the wherewithal to get there, pre-qualifying you just makes it that much stronger and takes that piece off the broker. The broker has to establish your level of financial strain, period. Whether
Mm-hmm.
you're providing the stuff to him or us, but you have to recognize and appreciate his position in the transaction. So that has to happen. So we explain it to every one of our clients. You would want that if you were the seller. So, and what we tell them is, you know what? Jim doesn't want to know exactly how much you have in the bank. He probably doesn't care. You know
Right.
what? Nobody in his office cares. You know what they care about? Can you financially secure the transaction and make this deal happen? That's really the bottom line. So the less they know about you, believe me, they don't want to know more than they need to about you, but they do want to know, as we said, they have to represent to the seller. You can financially get there. Well, get us that stuff, and it goes nowhere except we produce a letter for you to give to Jim, and then you're good to
And
go. And it just
and
cuts out
Steve,
that whole level.
absolutely. And Steve, and I think, what I love, and what I love about working with you, Steve, and I work with you quite a bit, is that I look at my pre-qual, and what me and my team do to pre-qualify a buyer is like the first defense. And we cut out a lot of people, but then when we send them over to you, you're diving deeper, and they're more likely to talk to you because you're an SBA lender, and you can do things like pull the credit, which we can't pull, things like that. So it's kind of like we're the first line of defense. But when we start getting really serious, where we're going to have a face-to-face meeting, or definitely before we accept an offer, we want to make sure this buyer is going to qualify. So go ahead, Steve, tell us. So a buyer calls you up and says, "Hey, I talked to Jim, Parker over at Boss Group. I'm interested in one of his listings, and he told me that I had to talk to you before we go to the next step." What's that conversation look like, and what kind of information are you looking for, Steve?
Great question. Well, and we have the generic email that we're going to send out to them with the 4 documents that we're going to need. But we also explain to them this is to their benefit too. Like I said, they can shop with our letter, and it should be recognized nationwide, which is not a concern. Getting back to the bank statements, right? We're going to have proof of their cash injection, no matter what it is. Now, a lot of times our clients, because we work with such high net worth clients, say, I understand I can qualify for 4 million. I'd like to see 2 million on my pre-qualification. 9 times out of 10 with our high net worth clients, we're reducing the level of qualification because they don't want to see 4 or 5 million on their transaction pre-qual. But we will have proof of cash injection, and these 4 things are non-negotiable in our office. Just so you know, if you see a diamond pre-qual letter, we will have these 4 items, or it's not going to be produced. And we explain this to our clients. That letter is going out on our letterhead to our broker community, which is the only community we serve. That has to be for real. So we will have their bank statements, and we don't care if it is 2, 3, 4, 5 bank accounts. They're going to send us every single one of them until we can verify that down payment. If it's an investor, mom, dad, uncle, cousin, it's going to be a conversation with them because they're going to recognize up front they're going to be including the injection, and they're going to be then providing their bank statements. But like I said, if you see a letter from us, somebody's bank statements are in their file verifying that cash injection. So that's a critical piece. Uh, so that's number one. Number two is their credit, right? We have to understand their credit. Typically, we're looking for, at a minimum of 640, 650, which is not our typical client. Usually, if you're doing a four, five, $800,000 transaction, and the buyer's coming to the table with 150,000, typically they have good credit. Again, and there was somebody in our firm guilty of not clean credit one time and got in trouble for it, but that was me. But my staff insisted you have to get their credit report. Uh, so
So Steve,
they will not be
640,
issued a pre-qual letter. Yeah.
640 to 640, 650 is the minimum. That seems really, really low. I'm surprised it's that low.
There again, it's going to depend on the circumstances. What we're going to do, if somebody has a 650 or 640 credit score, we're going to look at what the issues are on their credit report. We did have one scenario where his credit was low because he was paying a hospital bill off for his 4-year-old daughter that he'd been paying for years and years and years, but it was always on there. Guess what? Understandable things like that. But typically, if there's a 640 or 650, there's a direct reason for it. And there, again, it alludes to what I said before. It's probably a money management concern, and there are bigger issues there. And we're probably there's a good chance we may not get them there. But if there are things on that credit report where we can say, hey, if you clear this up and this up, you're right at 700. So we don't
Mhm.
want to cross off those clients, especially if they have the other three things we're going to request. So credit score, although is important, and the way we describe it to our clients is the better, but there are ways of working around some of it.
Yeah, I got a couple
You have
questions
a
on
question?
that. So, if they do have a 640, 650 credit score, and like you said, maybe it's they can make some, pay off some bills and things like that and boost it up. Do you guys also look at, hey, there's this one thing, because a lot of the credit stuff on the credit report will be there for 7 to 10 years. But if it was something that was on there for like 8 years, but since then they look like they're solid, do you guys take that into consideration as well?
Absolutely. We're going to look at the actual circumstances around whatever the case may be. It could have been they got laid off. We see that quite often, especially when you get into the higher level executives. They were out of work for 18 months. They got a little bit behind, but then they got a
Mm,
job and got back up. But that stuff's still on their credit report. So there are circumstances where we absolutely can work with them in the future. And we always try and give them the avenues to help make that happen. Hey, it seems like the concerns are here, and here. Concentrate on those. And a lot of times we'll see the client back in 6 months or 9 months with a higher credit score if that is the case, and the hindrance to them moving forward.
yeah, I
Because
got you.
typically, like I
So,
said, if we're working on their credit, they probably have the down payment, they probably have a resume, they probably have some other good attributes that we're looking for.
So a little bit of a story behind that is good. So 640, 650 is minimum. Where do you guys start to feel comfortable at when it comes to a credit score where you're like, okay, this is a great credit score for an SBA loan? I mean, obviously, 850 or whatever, but I mean, where do you guys start to feel really comfortable?
Yeah, anything over 700, 700, 720, we're not paying attention to his credit after that. One we just got yesterday was 796. We're not looking at his credit report. What? He's 796. His wife is 768. Guess what? That's a no-brainer. We're crossing that off. They're obviously good money managers, or at least handling their bills and things. So that's a no-brainer for us.
I, I
Anything
probably
like I said in the mid to 700s.
we probably want to also let the buyer know that don't go, and tell me if I'm wrong, don't go to 3 or 4 SBA lenders and have each one of them pull off credit reports, because that'll ding the
We
credit report.
actually, believe it or not, we don't want to pull credit reports. We give them two sites to pull their own so
Good.
that it doesn't ding their credit. If they can't or they struggle with that, we absolutely have the ability to pull it, because we will if we need to. I'm not coming back to Jim Parker saying this guy's got good credit without a credit report in my hand, period. But there are a few sites you can get to them for free that give detailed reports, which are acceptable for us.
Okay. All right. Excellent. Maybe that's something that I'm going to start doing in my office, is sending them to these free sites and have them pull down the credit report as well.
Yeah.
So you've got, and then you talked about the credit report. What about and the down payment? You want proof of down payment. Go on to the other two sources that you're looking at. I think one of them's a resume or a bio, like you had mentioned before. Correct.
Absolutely. The resume is the third leg of the stool. To be honest with you, that's the single next most important thing. It's funny because clients call us all the time and ask us about the down payment, and really, there's a direct correlation with the down payment and their strength in resume. And I don't know if you've been experienced in any of those, or if we did any transactions for you, but with an internal buyer, your general manager's buying the company. Guess what? That resume is off the charts. It couldn't be any better. So
Hmm.
that makes up for a lot. Right away, the lender's things, their mind right away runs to there's not going to be any surprises post closing. The guy's been internal. You bring me somebody who's been running the place 5, 6, 8 years. Guess what? There's not going to be any surprises there. 9 times out of 10, the seller's holding him back from doing great things. 9 times out of 10,
Right.
he wants to add product, do whatever. So resume holds a lot of weight. Now, on the resume, there are times where it's not even a close fit. Okay, especially on your larger transactions. When you're getting into a $3 or $4 million transaction, uh, the buyer is almost looking at industries or focused on cash flow and things he might know a little bit about. But 9 times out of 10, a $4 million transaction, they're usually not in the business, and they're usually they might have some related industry experience, but uh, how we strengthen that up is we provide them a transitional questionnaire because sometimes it's not a good fit. And you definitely want to address that before any lender gets their hands on it. And it isn't that we're making things up or creating anything to put on his resume. What we're doing is we're bringing out the transferable skill
Hmm.
that potential borrower has that can relate to the business. And there are a lot of skills that people don't think to put on their resume that will directly correlate to this new company. There's employee management and daily operations of different things. So it
Leadership,
is
managerial,
exactly.
strong leadership skills, man. And you and I have a deal going on right now. I don't want to mention that deal, obviously, but you and I have a deal going on right now that's going to be closing in next week. So to give you some reference of which one it is that we're talking about between you and I, that buyer's coming in, and this is my typical situation. I my sellers are usually business owners that may or may not have a high school degree. And they went out in the workforce and they worked their butt off. They learned a trade. A few years later, they started their own company. They were the person out by themselves doing the work. And then over the next 20, 30 years, they built that business up, they grew it, and they took it to a certain level, and they've done really, really well for them. And I have so much respect for these kind of people. The blue collar person that just worked their butt off and they grew this great business and they're making a lot of money from that business. And, they kind of took it to a point, and typically, usually, they're at a level that they've stayed at the last 4 or 5 years. They grew it as much as they want to and probably as much as they possibly can do. And then my buyers tend to be the opposite. They tend to be college educated. They went out in the workforce. They're in their 40s and 50s. They killed it in the corporate world, working for a corporation, and they're making a really good salary. They got a pretty good, very good net worth. But they're sitting there going, "I've always wanted to own my own business. I'm tired of making somebody else money. I don't want to start anything from scratch. I want to buy something that has the foundation." And they're looking at that business going, "I can take it to the next level." And that person typically does not have experience in that industry. And the one we're closing on next week, in fact, the buyer, the buyer fits that profile that I just told you perfectly. And we're getting the deal done. And that was from pulling it from the leadership and his work in the corporate world. I know I threw a lot at you, Steve, but
That's exactly right, though. And they don't know what skills really the lender's looking for, and it brings me back to a deal I did that was HVAC, where my
mhm.
buyer had no license, no experience in the industry, but he was a top level executive management person. He was a management galore. You could put him into any business, and that business will run more efficiently and better. Period. Well, the company he was buying was 4.5 million. It had 38 employees. It had 6 crews, 6 HVAC crews. So it got to a point where we're talking and discussing this with the lender, where I finally said to them, think about this. If this guy goes out and works on an air conditioner, we're all in trouble. That
Yep.
is not the goal here. The day he touches one, we're in trouble.
Well,
Okay?
you know
He's
what?
got 8 crews, almost 40
That
employees.
that buyer you just described for that HVAC business, you know, that buyer, I'd rather have that kind of a buyer than a buyer that has spent the last 15 years as an HVAC tech, but has zero experience at running, at leadership or running crews or, knowing financials or anything like that. Just because you can fix an air conditioning unit does not mean that you can run a business with 38 employees.
Exactly right. And you can write the rest of that picture. The company grew to the point where the seller became uncomfortable. It's too big for
Mhm.
me. He was doing too much admin and too much internal office work. And he was killing it financially. And it just got to be too much where anyone looking at that company would have instantly recognized this thing needs upper level executive management. And that's
Mhm.
what, when I brought it to the lender's attention, look at the company overall. It made perfect sense. And they said, fine, help us figure out the license and we'll make this happen. And that's what we wound up doing. But so a
Steve,
lot
this
of
is
times it's that additional stuff.
Yeah, Steve, this is like the perfect time to kind of give some insight too, because I right now I currently work almost exclusively with sellers. I'm not helping buyers locate businesses. I sell businesses between 1 million, that have gross sales between 1 million and 10 million typically, and I'm working with on the seller end, and obviously I work with the buyers when they're actually looking at the business, but I'm not searching for businesses for that buyers. I used to do that though. And when I used to work with buyers and search for a business with them, I would send that buyer over to you or another lender to get pre-qualified in a general sense. And then, after you guys pre-qualified it, you would have a letter that says, so-and-so buyer has been pre-qualified for a loan up to X amount of dollars. So, now like, so right now I have a deal going on that you and I are working on, a different one. We're in the beginning stages. We got a couple offers on this business. One of the buyers has a pre-qual letter from another bank. There's a generic pre-qual letter that says, we are willing to, do a loan up to X amount of dollars for so and so buyer, blah, 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 which is fantastic. I was really happy to see that when we sent over the sim, before we sent over the sim. But at this point, they put an offer in, and I'm like, okay, it's great that you put an offer in. I'm really glad that you got a letter from a lender saying that they're going to qualify, you're pre-qualified up to X amount. But right now, before my seller accepts your offer, I want to know, are you going to get qualified for this particular business? You know what I mean? Because that's my thought process. Because, I want to make sure that their experience directly relates to what's going on right now. And to tell you the truth, Steve, and you know this, they're working with another lender that I don't know. And I always like to try to send those buyers, even if they're working with another lender, to you, because I want to hear from you, because I know you. I don't know that other lender. And if you feel comfortable with them, makes me feel more comfortable than a lender that I don't know who they are. And even if they're not going to use your services, that's okay. But what's great is that most of the time after they talk to you, they want to end up using your services because you're just an encyclopedia of knowledge.
And there again, referring back to the resume, what I find a lot of direct lenders won't do is advise the clients because of liability concerns. And that is always the case. I have so many lender buddies, and a lot of times they hit a brick wall where they say, my buyer needs to know this, but I can't tell them for liability. They're not going to sit there and go through their resume typically and say, well, tell us about your computer experience. You were on a conveyor belt. And I bring up a conveyor belt because I did put a manager of a factory into a horse and feed grain store. Um, and that was a struggle. But what we learned was, yeah, he ran a conveyor belt, but he also handled all the daily management of those employees, where they stood on their annual reviews and raises, their hiring and firing, and none of that was on his resume when he first walked in the door. It was, I am the leader of a department in a factory that builds computers.
Hmm.
Well, if we hadn't interviewed him and learned all of those other things that related to All Horse and Green Store, he had great experience. We even went down the road to say, Well, if there's a custom computer being built, you talk to the client or the customer. Well, absolutely. Every customer, that builds a custom computer, I have to have direct current. Well, that wasn't on his resume. There were customer interaction there. So it's those pieces that we see most lenders drop the ball on. A
Right.
lot of times they'll say, well, expand on your resume or tell us this. That's why we specifically created a transitional questionnaire that kind of brings out the relatable skills in a borrower that can relate to the business. It's funny you mentioned the pre-qual letter because we do pre-qual and they don't have a business. But it's very rare a resume will actually stop a transaction from happening when you get to that size, executive and transaction, because they do have skills. It's just
Yeah, I mean,
bringing
if
them out.
they got the money for a down payment, they've gotten to a certain situation where they built quite a resume, But that's what I love about you, Steve, and is that you guys take the time out, and I should say you in particular take the time out to really have a really good conversation with the buyers. It's not just, hey, send me these documents, we'll throw it together.
Right.
That you guys, and I love that about you guys.
Well, there again,
That,
we want them to start thinking about their resume. If that is a concern, then we're going to point that out on that initial call. Yeah, we're going to send you the documents, but understand, start thinking about your resume because this is where we see the weakness. Nine
Mhm.
times out of 10, when they come to us, they're going to have some idea of an industry in mind. Hey, I'm looking at landscapes, or I'm looking at, what interests me is whatever, restaurants, or which is a bad example. So cross that off. But you get my drift. So 9 times out of 10, there's an industry in their head, home health care, something that interests them that they're kind of focusing on. Okay, well, your resume doesn't match this at all. So start thinking about your transferable skills into that. So this way, when you get your resume back to us, we can talk a little bit more about that. You know,
it's
it's rare they
funny.
say, well, anything that's $3 million. That doesn't usually happen. You know.
you, Steve, it's funny is that you said the restaurants and then you pulled that back because, my feeling about a really good business owner, somebody that's got really good business skills, that's run businesses before, that's very, very, just a great business person. I feel like a really good business person, a really good one, can run any business out there except for restaurants. I feel like restaurants is like an animal on its own. That's a completely different animal.
They're musicians and artists in my book, of which I have a great envy for. A way high skill level I could never achieve. And I was a food manager 17 years, but I do believe it's in their blood. Those people you can put into any restaurant and they'll do well. But it's restaurant specific, I think. So
Yeah, it
funny
goes
you
both
mentioned that.
ways. The restaurant guy
Yeah.
usually can't run a regular business, and a really good businessman can't run a restaurant. Anyways, so that's fantastic. And then you also do like a personal cash flow analysis as well, too, don't you?
And that's the fourth piece, and that's really critical. If a lot of, especially our larger, higher level executives, they're used to living on two, three, $400,000 a year, and sometimes when they first exit that level of job, and to your point, I'm looking for a business I can own. They don't know what they're looking for 9 times out of 10 on a cash flow level. Okay, so they start looking at four, five, $600,000 transactions because keep in mind they've never bought any business for any type of money. So what they don't understand is, well, when we're going to the lender explaining that yes, you used to make $350,000 and now you're going to make 100,000. Um, so that's why we require the PCFA, which is their personal cash flow analysis. We want to look at what their home bills are. Now, if he's been making $350 a year, but they live on $60,000 or $80,000 personally, well, that lends huge close. Their money management skills are just off the charts. That's a great money manager, and then that's not going to be an issue. Yeah, if they make 350, but yeah, we have Jaguar payments and Hummer payments, and I can't tell you how many times I've seen 4 or 5, 6 car payments on a financial statement, and a mortgage, that's $800,000 on a 900 house.
Hmm.
That's a concern. That's a bigger concern for us. So that's why that PCFA form is going to give us kind of an insight into what they're going to have on a personal level to support their household. And
And that
like I
makes a
said, that's
huge
going to matter. But
and that makes a huge difference
absolutely.
because because when you're trying to figure out if the loan works for them, you have to put aside money for their salary to pay their personal expenses before you start, figuring out, their debt service coverage ratio, correct? Or am I?
Exactly. We're not going to be able to, right. Someone who needs $250,000 a year to pay his home personal bills is not going to be able to fit into a $500,000 business. It's just not going to be
Mhm.
enough cash flow for them. And a lot of times it's an education process. We have to teach them, hey, you're going to have to look at businesses from $1.5 million to 2.2 at a minimum. So those are things that initial executives leaving the workforce don't understand or know how to even calculate. So we
Mm.
help them through a lot of that to kind of focus them on size business that they need to at least look at as a minimum.
So you guys asked for those 4 documents, and you guys look and review over those documents, and then you'll have conversations with them to talk a little bit more about their experience and their background, because you're trying to pull things that are out that are related. What else are you doing in that first 1 or 2 conversations that you have with that particular buyer?
Depending upon the transaction and the strength of the buyer, we are going to explain to them, yes, SBA requires a minimum of 10% down. We're pre-qualifying you at 15. So with our default is a little bit stronger than most, but there again, we're coming to Jim Parker saying this guy can get there. If he has a solid 15% down, then there's a good chance we're going to find a way to make him get done. We also quote 15 to give us that little extra leeway. Yeah,
Hmm.
yeah, his resume is a little bit weak, but he's putting down a little bit extra. A lot of times, and this is something that comes up all the time, especially with my higher net worth clients. Why are you making me put down so much? You have me putting down 15%. You know what? It makes the deal look really strong when I go to credit. But here's what I'm going to do, I'm going to increase the working capital coming back to you. So your net into the whole transaction is 8%, 9%. But I'd rather you put down $350,000 and me give you back 150,000 operating capital back to you, because
Hmm.
overall the deal looks so much stronger and you have it. It's not a concern. So trust me on this. This is going to make our whole process a lot easier. But sometimes that might be a structuring thing that helped with a resume because his resume wasn't exactly there. I'll present it then to the lender here. He's coming in with a stronger down payment.
That's fantastic. Okay. All right. And
So
then what
it's
else?
all of those pieces that make up the real structure that's going to happen.
And then you're getting into the logistics with them too, about their home and what could possibly happen with them with that as far as collateral. Can you elaborate on that as well?
Absolutely. So the way we describe it, and this is a true conversation that we have with every borrower on the very first call, we care about those things: resume, down payment, credit. I say, now, if you tell me you have those three things and nothing else in this world, you're my perfect candidate. But with my high net worth clients, now we get into, all right, now tell me about your houses. How many do you own? Well, I own 3 houses, 4 houses, whatever the case may be. We're going to go through those houses one by one to make sure that that client understands the collateral position the lender's got to take in a house. If you have, and this is the rule, if there is more than 25% equity in a property, it must be taken for collateral if the loan is under collateralized, which mine are all under collateralized. But what I'm going to do with my high net worth clients is we're going to go through those houses one by one right up front. And it may be a case, and this happens, well, my wife's never going to allow you to put a lien on our house. Well, that's okay. Now that we're on the same page, we can't work together, but because that house is going to be taken for collateral on an SBA loan. So you're either not going to be in an SBA transaction or you're not going to make any of these happen, which is okay. We both want to know that today. That's, again, something lenders never bring up, which is why it comes up in our firm on the very first conversation. The last thing we want is a high net worth client in 3 weeks to find out we're taking liens on 2 of his houses and then have him walk. So that's why we're going to go through that in the beginning. And that's how we describe it to them. It's okay if we can't work together, but we all want to know that today, including Jim Parker,
Yep.
and the seller. If you're not willing to, or if your wife's not willing to sign that's understandable.
Yeah, it is understandable, and it's glad we know it up front. I mean, with the national average of deals that fall apart, and this was just in the market pulse again for the IBBA, and it's the IBBA market pulse that comes out, the International Business Brokers Association market pulse. Again, the most recent one, and you see it all the time, is that 50% of the deals that go under contract fall apart before they get to the closing table. If half my deals fell apart before they got to the closing table, oh my gosh, I would cry. I can't imagine people work that way. And it's a lot of educating on my end up front, educating the buyer, educating the seller, everybody going in eyes wide open. But that's what I love, working with you too, Steve, is that, from an SBA standpoint, working with them on that loan, you're trying to determine that kind of stuff up front as well. And I love that.
Absolutely. Well, here's what we preach. It's all about no surprises, especially when you get into your higher educated, high net worth clients. They want data and understanding and information. And that's what we're all about providing. We want to make an educated decision together. I did have one scenario where the wife called me up and she said, "So I have to sign away my house and you're going to put a lien on my house." And this is a true story. I said, "Yes, you're going to sign away your house, but I promise your husband can replace it in 6 months. I'm adding $450,000 to your budget. Your house is only $300,000. He'll buy you a new one cash in 6 months." And
That's fantastic. What did she
talking about the
say?
outside. That's what I told her. She said,
What
"Well,"
did she
she really
say?
had no idea how much. She said, "Oh, so I have to sign?" "Yes, you have to sign. Just sign." But it was a partner buyout, and his partner was taking 450. So I said, "We're adding 450 right to your bottom line."
That's
But
fantastic. And
yeah,
it's
that
not
was
your rule. It's not your rule. It's an SBA
right.
rule. You don't have a
Right.
choice. You can't waive that.
Right.
And then
But
you have a whole questionnaire that you're sending out to them as well. I mean, because we got to worry about criminal backgrounds, and we got a deal going
right.
on right now that one of the buyers. I mean, he's probably in his early 50s. He did something in college, and we got that taken care of. But you have a whole questionnaire that that you guys send out as well.
Absolutely. Well, there should be no surprises. And like I keep alluding to, what no one wants to do is get 3, 4 weeks into a transaction and then have it fall apart. And that's what we tell our clientele. That's why we're as upfront as we possibly can in the very beginning. The bait and switch thing does run rampant in our industry, and that's a pet peeve of mine. I won't do that. But we see it all the time where people promise things that they can't come through on, and just to get the buyers engaged and everything else. And we want to provide information and help them make an educated decision correctly.
So you've
You
got
know,
you've got four forms that you're asking for, four pieces that you're asking for, and then you're having a conversation with them. This is one thing that I want to point out to my fellow business brokers that are not as familiar with SBA loans, because they might be like, "Wow, that's a very time-consuming process. This is going to take forever." How long does it take you guys at Diamond Financial to turn around a pre-qual on that buyer?
we quote 2 to 4 hours. It's within minutes. And really, it's because we're serving your market. We want you to know. And we also know if it's a good listing, you're going to have 25 calls by the afternoon. So we don't want that buyer to miss out. If you're recommending that he come to us, well, what we want to do is we're going to send him them forms. If we get them forms back within minutes, that's going to A, show his interest level in the business, but B, show, hey, he's committed to getting this letter and getting back to you ASAP, which is great. But we're going to turn that around ASAP because we want to save your time, and that's always our focus is the broker's time. So our guarantee is 2 to 4 hours, but it happens a lot faster than that. Unless there's some extenuating circumstances, we want to turn them right around.
So I got a two-part question for you. When do you see most brokers having buyers pre-qualify? I mean, most brokers having the buyers pre-qualify with you, and when would you like to see them get them pre-qualified with
I
you?
think I can answer both of them the same question. It's really so they sign an NDA, you send them some initial information. That's where it usually stops. The majority of our broker offices that we work with, their next line to that buyer is, hey, this seller requires a lender pre-qualification letter prior to sending and disclosing any additional documentation. Once you get that, we can share everything. If you have a lender, that's great. Go get a pre-qual letter and we'll provide the information. If not, go to Diamond, 2 hours, they can do it, and we can get you that information ASAP. But I think it should be after that initial free information and before anything else gets disclosed. Especially if it's a hot listing, you're going to get
Yep.
75 inquiries in 2 days. Well, the way to screen them out right away is, and that's another thing. If we send out those documents and we don't get them back for 3 days, there's your level of interest in that buyer. That
That's
really
true.
goes to
That
show.
Steve,
You know,
that's a very good point. That's a very good point. The quicker that buyer is getting you the information, because I noticed that on my end too, that you obviously the buyers that are requesting for things very quickly and moving quickly, getting the information that we want, they're more serious than that buyer that takes them like a week or 2 weeks, and it's the same thing. Yeah, I agree with you.
right?
Yeah.
Sometimes when we initially get it back, I won't even waste time, and I'll call you and I'll say, "Hey, that guy Joe just sent in his documents. Show Joe anything he wants, because that's what you need to know." You
Yeah.
know,
Yeah.
before we even have time to produce a prequel, give Joe anything. I have everything on Joe, and he can do whatever he wants. So sometimes it's that quick.
And for me personally, from a broker standpoint, I'm going to reiterate this because I think it's important from a broker standpoint. That buyer might already be working with an SBA lender, but I really want that buyer to talk to an SBA lender that I know I feel comfortable with for a couple of reasons. One is that way I have a trust with that SBA lender. Like, you're an SBA broker. I have that trust. And I'm like, hey, Steve, how do you feel? And you're not telling me anything you're not supposed to tell me. You're telling the buyer the same thing, but I have that trust going on. And, just a lot of times, I've worked with a lot of SBA lenders over the years, and I feel like I've got a little core right now of SBA lenders that I know are really, really good at what they do. And I have trust in them, and we're going to get the deal done. And they're good at communicating, where I've worked with other SBA lenders where, it's just a nightmare during the transaction. They're making an excuse and pulling out at the last minute, and things are just a mess. And, I really want the buyer to use an SBA lender that I use, because I feel like I've been doing this for a long time, Steve. I feel
Right.
like I've kind of found my core people, including you, that I know are top notch. And that's what I want to stick to. And instead of working with just a good SBA lender or an average SBA lender, or hopefully not a bad SBA lender, I'd rather work with somebody that's great. And that's what I tell the buyers. Like, these people are the best, the best that I came across. This is what I do every day. And that's why I use them.
It's funny we talk about, you putting a good listing up there and getting 75 inquiries. We have had many times in that scenario where, hey, I have 4 buyers that look really good to us. Here's all 4 of them, pre-qual all 4 of them. And the brokers come back to us and said, we really like this guy, Chad. He just, hit it off with the seller and it's great. And I've said, Chad's not your buyer. And
Yep.
they said, what? And I'll say, you know what? Jonathan is your buyer. Well, we don't really like Jonathan. I'm telling you now, he might be a little gruff around the edges, but Jonathan is your buyer, not Chad. And I've had arguments with the brokers, and guess what? Jonathan has closed the transaction. So a lot of times, well, for a few reasons, and one of them is they're going to talk to us differently than they talk to you guys.
Yep.
Because we're demanding things, we're above them. They have to. So it's a different whole attitude. Plus, you're the broker and the enemy. I'm sorry to say that, but I think y'all know when it comes to the buyers, they think you're on the seller side and you're the enemy. So right away, we're on their side
Until they
and
get
we're
to
their
know me,
friends,
and then
and they
they realize
disclose a
that's
lot.
not true. But yeah,
There,
go
there
ahead,
you go.
Steve.
And then there you come. And I do tell them that. I do tell them, guess what? Jim's real goal is to put the buyer and the seller together and do the right thing for everybody. But
Yep.
still, in their mind, when they first meet you, you represent the seller. That's just, and there's nothing you can do about that. But so once we learn more about them, we can say, you know what, this guy really has it going on, and it's stuff that you might not be privy to. He knows he's got a best friend in the same industry that they're going to trade accounts with the day after. He's not going to tell you that because it could change the value of the business, or you might think differently of
Yeah.
him. So So there's a lot of behind the scenes that go on where, we might recognize a skill set or something in a buyer that you kind of missed or they didn't disclose to you. And that comes up more often than you would think when you get a
Well,
hot
again,
listing and get 75 potential inquiries.
yep. I mean, right now we've got 3 offers on a business, and one of the buyers we've discounted already. Internally we discounted, and I don't want to get into why. The other 2 buyers, they're kind of neck and neck, and there's one that I think is better than the other. But that's what I'm doing with you right now, is having those buyers. You talk to you. Both of those buyers talk to you because I want to hear your input. Obviously, you're not the final say, but then I'm going to go back to the seller. The seller and I are going to talk about each one of those buyers. I'm going to give them the input that you're giving me. I'm going to give my input. They're going to, say their input. And, together the seller and I are going to, the seller at the end of the day is going to choose. But, what you have to say carries a lot of weight, as well,
Right?
because, that's how the loan's getting done.
And like you said, we all want to be in that loop. This is an educated decision we all want to make together. I don't want to say, hey, Jonathan needs to be your buyer, and that's the LOI you're signing. What I'm going to tell you is, here's why I think Jonathan is a much better fit. He has A, B, and C behind him that you're not privy to, or, his financial strength is a lot stronger than Chad's, or whatever that case may be. But I want to bring you in the loop so that you can educate, again, your seller and make a decision based on all the correct information. So I think that that's
That's
critical.
that's fantastic. Let me ask you this: what what do you want brokers to educate the buyers on before they give you a call? Is there anything that you're like, gosh, I wish more brokers would, talk to the buyers about XYZ?
There isn't a lot. We try, when you're putting a listing out there, you're going for mass exposure, and we get that. So screening them to any level is a great thing. You have to screen them to some level, but past that, like I said, they feed you misinformation. And something that is near and dear to my heart from 20 years ago is, how far down the road do you go? So you request their personal financial statement, you get it, and you say, something just doesn't look right. Okay? I mean, how many times? I know that's happened to you if you've been looking at
Yep.
people's personal financial statements. So now do you say, I want to see these bank statements? Or, you know what? Do you not have car loans? Or how much, something's just not working right here for me. Because
Yeah.
after a while, if you've seen enough, you kind of can get a feel of what that buyer looks like by just looking at his PFS. Okay?
Right.
Well, again, how far down the road does Jim want to go? Does Jim say, you say the money's in your IRA, can you give me a statement? So there's going to be a point where you shouldn't be torturing them, and they don't really want to give you more information. He might be a home run, but there's a disconnect there because the higher the net worth, the less they want to disclose to you. That happens a lot too. I don't want to tell the broker everything that I have. Why do I have to tell him everything? I could be a
Right.
$5 million net worth buyer. So that's the other side of it. But I always want to step in between. When that starts to get a little concerning, you should stop and demand a pre-qual letter. It costs nothing. There's no obligation, anything like that. But it takes that burden, and more importantly, the friction between you and that buyer off the table. And that's more what I care about. Because the first thing I'm going to say is, get me those bank statements. Don't care. I
Yep.
don't care if they're
Yep.
mad at me. I don't want them mad at you.
Yeah, and I agree with you,
Okay.
because my whole thing is like, when you made that comment earlier about, the buyer kind of looks at us as the enemies, and they do at first, maybe not the enemies, but they got their guard up, with the broker, because
Right.
they're like, okay, they got the listing, and they got their guard up, and and it's really not that way, because at the end of the day, once we go under contract, we got an SBA loan going on. It's going to take 90 days to close on that deal, Steve. Both parties, the buyer and the seller, have to feel good about that transaction when they actually sign the APA, the asset purchase agreement, because if one of them does not feel good, there's too many things that are going to happen from contract to closing that one of them's going to walk away. It's not like selling used cars where the person drives off the lot, you never see him again. and it's a long process, and plus it's the ethical thing to do. Like me and my team, it's about getting a good quality buyer for a good quality business and a good quality seller, making that good match, and making sense all the way around. Now we do try to maximize what the seller is going to get as far as a purchase price, but that's because we're creating the demand. And if this particular buyer doesn't want to buy it, typically we have other buyers right behind them that would willing to do it. So, it's just the situation. So I
It's
don't
funny.
want to have that ill will. And I like that because I need to start building that relationship with the buyer, because the better relationship that I have with the seller and the better relationship I have with a buyer, the better I'm able to put this deal together and help both parties get to the finish line.
Well, to your comment, so here's our actual line: good brokers love us, bad brokers hate us. And what you just said was exactly right. You want all the parties to win, and that's what we preach too. And we tell them a good broker is going to want to do the same thing too. So these are good brokers. We only work with good broker offices. So if they're in our transaction, they're a good broker, and they're looking for the best for everyone, and not just one person. But unfortunately, yeah, you all know that is also a reputation that we've been fighting for the last 25 years. You
Yeah,
know,
yeah, no, it
so
is. No, it is.
and that is something I try to work on all the time too. You know what? Once you sign an LOI, he's pro deal and wants to do the best for everybody. You're in charge of negotiating the purchase price and all that. But past that, once you have a deal, Jimmy's our friend. He's on our side. He's going to help us every step of the way. Uh,
Right.
and they do usually get that, especially as we beat that into their head. He wants to do the right thing for you. When we describe a good broker to our clients, we say it's a broker that wants your transaction to be exactly what you want and benefit all parties. And you know what? If you went to a good broker and said, listen, I found this and I can't make this happen, they're going to help you get out. They're
Mm-hmm.
not going to sue you. They're not going to push you. That's the difference between a good broker and a bad broker. It's the transaction to best benefit all the parties. And those are the brokers that we work best with. And that's how we explain it to our clientele.
I truly, genuinely want that buyer to acquire that business and be successful and do very well with that business. And you know what? My sellers that I work with feel the same way, because it's their
Right,
baby. They grew that
right,
business themselves. They want to see it continue. And you know what? I personally wouldn't work with the seller if they were like, yeah, I don't care who buys it, and I just want my money and I'm just going to run away, and I don't care if they fail. I want the seller. I don't want that. I don't want to work with that type of seller. I've actually turned down listings, good quality
right,
businesses, because of the
right,
seller's personality. And I could that's a whole nother webinar. But at the end of the day, I want a seller that's gonna be like, I want to be there post closing. I want to give them necessary training post closing, and if they need a little bit of time on top of that, for a little bit of compensation, I'm good with that, or I'm willing to stay as a consultant, because that's all part of just making that deal go through. Steve, I wanted to also mention, for the brokers that are not getting buyers pre-qualified, for a business that they're going to put, that they're going to work with, that's going to be for an SBA loan. What I tell the buyers is that, hey, yeah, talk to Steve before we can go to the next step. Call Diamond Financial, get a pre-qual with them, and I tell them, look, even if you don't move forward with this transaction for one reason or another, maybe the next step that we go at, you're like, the business isn't for me. Don't look at it as wasted time, because now you're going to get a pre-qual letter. I got ink on my hand. You're going to get a pre-qual letter from Diamond Financial or whatever lender that you're going to be working with that says you're pre-qualified. Now you can use that letter when you're talking to other brokers about businesses, and you can say, I've already been pre-qualified. So don't look at it as a waste of time.
absolutely. Yeah, and our borrowers want that because there again, they can skip that whole personal financial statement level on a broker. And it's funny because what we tell them is, hey, hand this to a broker. If they don't recognize it, that's a concern. They should know who we are. But we also, to your point, we try and convince that buyer, listen, you need to have a great relationship with the seller and get everything you can. My specific line is, there would be nothing better than 6 months after you close on this business for you to be able to call that seller and say, hey, I came across something I've never seen before. And that seller want to genuinely help you. And that's the attitude you have to go into the transaction with. So
Exactly.
you know that
It-
seller is a huge benefit to you. You have no idea. And I've seen transactions where the buyer will just beat the seller up till the very last day. No, I'm going to talk him down another $2,000. And I'm like, it's $1.5 million transaction. Do you understand what you're risking here? But they don't care. It's about the dollars, and that makes me crazy because I think that they lose on such a up level. I've seen sellers where they say, "I'm not talking to this guy day after closing. Don't care." Well, that breaks my heart. There is
yeah.
so much of a value there that I think the buyer is missing out on. So I try to bring that to their attention also.
It's not just a matter of finding the money, finding the person with the money, having a good business and matching those two up. It's a matter of matching up if you all can, and most of the time you can, matching up good personalities, a good business with a good seller and a good buyer where they're going to get along. And I go against this whole thing that once you go under contract, you keep the buyer and the seller separate from each other and they don't talk again, and you want to keep them separate. I know that that's been entrenched in brokers' minds over the years. What we do is once we go under contract, every 2 weeks we have a buyer seller meeting where myself, my closing coordinator Stephanie, the buyer and the seller, we jump on the call, and the seller will give updates on the business, and the buyer will ask questions to the seller, and then the buyer gives updates what's going on their end, and there's that communication going on. And then sometimes these calls, they're an hour, but then once everything's been kind of submitted and it's an underwriting, it might be 10 minutes, and then about 2 or 3 weeks before closing, we might have an hour. Then we might again have a weekly call because we're talking about the transition and how we're going to handle the transition. And Steve, having that call and having that relationship to continue to build, because usually they get along really good at that buyer seller face-to-face meeting. That's why they went under contract. And we want to foster that relationship. We want it to be transparent on what's going on. And then when there is a problem, they're more likely to work together. I know we're getting off the track of pre-qualifying a buyer, but I had to throw that out there because we were talking about relationships between buyers and sellers.
I totally support that. If you want to know the truth, on my initial call with any buyer, it's typically pre-meeting the seller. And my advice to every buyer is during your very first face to face with the seller, it's not about the numbers. Don't talk about the purchase price or any of the numbers. Guess what's less important? What you care about is the operation of the business, understanding the operation of the business, and making the seller fall in love with you. And
Yes.
there are differences there. If he's been there 30 years, guess what? He don't care about the money. He cares about what you just hit on: the staff, his legacy, the operation of the
Customers.
business. Yep, there is a lot more important things than money. So I tell and advise every one of my clients in your initial meeting, don't bring up the purchase price or talk anything about numbers. Get a feel for the operation, understand the seller, and get in a relationship with that seller, because that's where your advantage is.
That's fantastic. Steve, is there anything else you want to add before we wrap up today?
No, I think that you got to monitor your buyers, and it's all about not wasting time with them. And I've called you and I've said, listen, this buyer, he can't get there. I know we've had
Yeah.
that conversation recently where I said, you know what, I just found things out about them. They're not
Oh
going to be able
yeah,
to get
that
there,
one.
and it comes down. Yeah, as soon as you find stuff out, as soon as we recognize this borrower is not going to happen, you're going to be the next call we're going to, because it's all time. That's what brokers have to sell, is their time and
And
their expertise. So we are very
that's hiding
broker critical when
information,
it
by
comes
the
to
way. If
time.
somebody's listening, was information they hid from me and they originally hid from Steve, but it kind of came to the surface
Right.
very, very quickly as well.
Yeah.
Steve,
But
I
as soon as
agree
we
with
recognize that stuff, we got to stop it. So yeah,
you.
thank you for getting this information out there. Whether it's us or anybody else, you want a lender that's going to go down this road and back that buyer.
Pre-qualifying buyers is key to the transaction. You don't want to waste the seller's time. You don't want to waste your time. You don't want to waste the buyer's time. You want to get the deal done. With 50% of the deals falling apart nationwide, this is you don't want that to happen. I don't know. I'd go crazy if that was happening. Steve, I really appreciate you chatting today. Thank you so much. And for you guys out there that are listening, fellow business brokers, if you're listening to these Let's Chat shows, and you're getting any information out of there, I just ask you to do me a quick favor. It's obviously there's a lot of time involved with these, and if you could like the video, comment on the video, and you can subscribe to the channel, it would be greatly appreciated. But until next time, take care.